Hello, this is Japanese Economic Review Channel. This time, let's take a look at SBI Securities' domestic weekly outlook.
Sounds good.
And I want to give a huge welcome to you, our listener. If you are someone who loves to stay thoroughly informed, but, absolutely hates feeling overwhelmed by financial jargon, this week's data-packed outlook is exactly what you need.
Yeah, there is a lot to unpack this week.
There really is. So for this deep dive, we are on a very clear three-part mission. We are going to cover three specific sections. First, this week's stock market outlook. Second, key materials and Forex, so foreign exchange. And finally, the third section, the weekly timetable.
Which is quite the gauntlet this time around.
Oh, man, you are not kidding. But let's jump right into section one, this week's stock market outlook. Because the big picture for the Japanese stock market right now is, well, it's looking incredibly heavy.
Very heavy, yeah.
Right. I mean, we saw the Nikkei 225 close down heavily at 53,819.61. And the TOPIX wasn't spared either. That dropped down to 3,629.03.
Yeah, those are some really stark drops. And, we have to look at why this is happening. The market is essentially being weighed down by two massive anchors right now. First, you have U.S. private credit issues.
Okay, right.
And second, and arguably much more visceral, you have the escalating tensions in the Middle East.
Yeah, let's talk about the Middle East factor, because that seems to be the real shockwave here. I mean, specifically, Iran is effectively blocking the Strait of Hormuz, and we are seeing actual reports of ships being attacked.
Exactly. And that is the central artery for global oil. When that gets choked off, the panic is immediate.
The analogy that came to my mind while reading the sources is that the stock market right now is essentially a hostage strapped to an oil barrel.
Wow. That's a very vivid way to put it, but honestly, it's accurate.
Right. Because Japanese equities are currently lacking any real independence. They aren't moving on their own merits or corporate earnings. They are just moving in absolute lockstep with New York crude oil futures.
Yeah, the cost of energy is just dictating everything.
But so here's my question. With all this gloom, right, and we see short positions piling up everywhere, isn't there a risk of a sudden explosive rebound?
Oh, absolutely. That is a massive risk right now. In fact, because those short positions are heavily accumulating, the market is basically acting like a tightly coiled spring.
Because everyone is betting the market will keep falling.
Right. They are borrowing shares to sell them, hoping to buy them back cheaper later. But if any positive trigger hits the new anything at all, those short sellers are going to be forced to buy back shares immediately just to cover their positions and avoid infinite losses.
A short squeeze.
Exactly. A surprise rally sparked by forced buying. And that is exactly why the SBI projected range for the Nikkei this week is so incredibly wide. They are projecting anywhere from 51,500 all the way up to 55,500 yen.
That is a massive spread. So what are the geopolitical wildcards that could actually act as that trigger? Because on one hand, we have Iran's new hardline leadership, which, is highly unlikely to just yield.
Right. They aren't going to just back down.
But then, on the other hand, you have U.S. President Trump out there claiming that the conflict will, quote, end soon, even though all the evidence on the ground points to the exact opposite.
Yeah, the rhetoric versus the reality is fascinating here. The Outlook notes that out of sheer frustration with what's becoming a war of attrition, Trump might just declare a unilateral victory.
Just to close the curtain on it.
Exactly, just to be done with it. And the crazy thing is, the market would likely celebrate that. Even if the underlying tension remains, that kind of definitive statement could be the exact spark that makes that coiled spring snap upward.
Oh, wow. Market psychology is wild. And we should also briefly tease some domestic factors that could move that spring, right?
Mm-hmm.
You've got the Shento, the spring wage offensive, their concentrated response day is coming up on the 18th.
It's very important.
And Prime Minister Takaichi has a scheduled meeting with Trump in Washington on the 19th. We will dig into both of those in the timetable section.
We definitely will. They're huge catalysts.
Which brings us perfectly to section 2, key materials and Forex. Because you just cannot talk about oil's grip on the stock market without talking about its direct, really profound impact on Japan's currency.
No, you can't. They're completely intertwined.
I mean, Japan imports almost all of its oil. So let's recap this absolute roller coaster we've seen with WTI crude futures.
Yeah, it's been wild.
It nearly hit $120 a barrel, which is terrifying. Then it plummets all the way down into the $70 because of the news about the coordinated G7 oil reserve release, plus Trump's almost over comments.
A brief moment of relief.
Right, brief being the keyword,
Yeah.
because then it just climbs right back into the $90 as the ship attacks in the Strait of Hormuz persisted. And I have to push back on this whole strategy a bit.
Okay, what do you mean?
Well, the G7 reserve release feels like putting a Band-Aid on a geyser. I mean,
Yeah.
if high oil prices are structurally damaging Japan's economy because ships physically cannot move through a strait, isn't any government intervention in the currency or oil reserves just, delaying the inevitable?
That is a very fair critique, and it highlights the brutal tug-of-war happening with the US dollar and the yen right now. The yen has faced this incredibly heavy selling pressure simply because the market fears the long-term economic damage from that expensive oil.
Because Japan has to sell yen to buy dollars to buy the oil.
Precisely. Now, we did see some rate check rumors recently, which momentarily cooled the yen's surge.
That's when the Bank of Japan calls dealers to ask for quotes, right? Like a warning shot.
Exactly. It's a psychological warning.
Yeah.
But as you pointed out with your geyser analogy, the strong dollar trend remains heavily supported by the structural oil issue. The warning shots only do so much.
So, looking at the outlook, what is the expected range for the dollar-yen this week?
The report outlines some critical boundaries. The absolute bottom they expect is 156.000.
Up 56. Okay.
Yeah, and that specific number is important because it's the exact level we were at just before the full-scale U.S. and Israel military attacks on Iran began. The downside is really limited until oil actually stabilizes.
Okay, so that's the floor. What about the ceiling? How high could the dollar go?
The ceiling is set at 162.000 yen, and traders are keeping a very close eye on the July 2024 high, which was 161.95.
Wow, 162. And, I mean, as we approach that 160 mark, the threat of currency intervention by Japanese authorities just becomes this massive looming shadow over the market, doesn't it?
Oh, it's huge. Every trader is hyper aware that at any moment the authorities could step in and aggressively buy yen. It creates a very tense environment.
Okay, so we know what is moving the markets. But knowing what is moving things is only half the battle.
Right.
Knowing when they will strike is the other half. So let's move to Section 3, the weekly timetable. We have a very detailed calendar here, so let's break it down day by day.
Sounds good. Let's start with Monday.
All right, Monday, March 16th. We have some major data dropping. China's February retail sales, industrial production, and urban fixed asset investment.
Which is always a key indicator for regional health.
Yeah. And from the U.S., we get the NY Fed Empire State Manufacturing Index and U.S. industrial production. Also, event-wise, the NVIDIA GTC AI conference kicks off in California, and we get Hanhai Precision Industry earnings.
So Monday is really setting the stage with global manufacturing and tech. Those tech events are critical because AI is practically its own macroeconomic force right now.
Totally. Okay, then Tuesday, March 17th, we get Japan's Tertiary Industry Activity Index. The RBA, the Reserve Bank of Australia, has their board meeting. Germany releases its ZEW economic sentiment. And crucially, the FOMC meeting begins in the U.S.
Right. Tuesday is a lot of positioning. The market is holding its breath for what comes next.
And what comes next is, looking at Wednesday, March 18th, I'm just in sheer awe at the density of market-moving events here. I mean, how should a listener even navigate this data avalanche?
It really is an avalanche. Wednesday is the gauntlet of the week.
It's insane. Okay, so the BOJ monetary policy meeting begins. We get Japan's February trade stats and foreign visitor numbers. The ECB regular meeting begins. And then we have that critical Shinto concentrated response day we mentioned earlier.
Right, the spring wage offensive.
And that's just the domestic side. Globally, we have Fed Chair Powell's press conference and his economic projections. We have U.S. PPI data, the Brazil central bank rate announcement, plus earnings from Tencent and Micron. Where do you even focus?
You focus on the intersections. The Shinto is massively important because significant wage hikes are the prerequisite for the BOJ to ever normalize policy. But simultaneously, Powell's press conference will dictate the global dollar trend.
So it's domestic wage pressure colliding with global dollar strength.
Exactly.
Which brings us to the climax on Thursday, March 19th. We have BOJ Governor Ueda's press conference.
And that is crucial. We have to see how the Shinto results, combined with that Middle East supply-side inflation, actually impact his tone.
Yeah, is he going to sound hawkish because of wages or dovish because of oil?
That's the million-dollar question.
Right. Also on Thursday, ECB President Lagarde's press conference, the Bank of England MPC, and geopolitically, the major Japan-U.S. summit between PM Takaichi and President Trump in Washington, plus AIA Group and Accenture earnings.
That summit is a massive wild card. Any comments on trade or the Middle East could send immediate ripples through the yen.
And finally, Friday, March 20th. Japan is actually closed for vernal equinox day.
Much needed rest for the Tokyo traders.
Seriously. Though China does announce its loan prime rate, or LPR, that day. So looking at this whole timetable, how do we connect the dots here? What's the synthesis?
The main takeaway to synthesize from all this is that the major central banks, the FRB, the BOJ, the ECB, they are all expected to simply hold their rates steady this week.
No actual rate changes.
Highly unlikely. But the real focal point is their rhetoric. Do they believe Iran's chaos will accelerate inflation, or will it cause an economic downturn? Their tone on that specific issue is what will move the markets.
Wow. It's all about the narrative.
It really is. And it leaves us with a pretty provocative question to think about. If global central banks keep holding rates steady, but inflation remains stubbornly high, strictly because geopolitical conflicts are weaponizing supply chains, like we see in the Strait of Hormuz, are we entering an era where traditional monetary policy is simply powerless against geopolitics?
Oh man, that is a heavy thought.
It's something to watch very closely as Governor Ueda and Chairman Powell speak this week.
Absolutely. Well, thank you for watching the Japanese Economic Review. We look forward to having you with us again.